Widely followed stock picker Cathie Wood of ARK Invest, looking to bounce back as her funds continue to underperform, is using recent market volatility to buy the dip on big growth names like Tesla and Robinhood, both of which have seen shares struggle amid the wider sell-off in January. Cathie Wood's ARK Invest took advantage of a slump in the electric car maker's shares following its results, piling into the stock after months of paring back holdings. She has slowly been strengthening her position on Tesla shares. What does she think Tesla could be worth in the future? Keep watching to find out everything. The founder and CEO of ARK Invest purchased a total of 2.58 million shares of popular stock trading app Robinhood after the stock plunged into a record low of less than $10 per share on Friday following a dismal quarterly earnings report. Wood purchased more than 2 million shares for her $12 billion flagship ARK Innovation ETF, with a total stake in Robinhood worth nearly $200 million according to Morningstar data. Robinhood is down nearly 70% since going public last year, but Wood has continued to buy shares of the company since late October, when the stock plunged below its IPO price of $38 per share. Tesla stock has fallen over 20% so far this year amid a wider sell-off in growth in tech stocks, but Wood's latest purchase may be a sign that she thinks shares are down to a more reasonably priced level. Elon Musk's electric vehicle outfit is Wood's biggest holding in her flagship fund, making up about 8% of the ARK Innovation ETF, a position worth over $900 million according to Morningstar data. The investment company bought nearly 33,482 Tesla shares in early February, worth nearly $28 million based on the stock's last closing price across its flagship ARK Innovation ETF and the ARK Next Generation Internet ETF funds. Shares of Tesla tumbled 11% to $829.10, their lowest close in 3 months, after the company delayed releasing new vehicles until next year because of chain supply disruptions it said it could last through this year. The fund began trimming its holding in the company in August 2021, according to daily trade notifications compiled by Cathie's ARK, a newsletter service and online forum that tracks the asset manager. Shares of Tesla Incorporated slid in January, dragging down rivals after the leading electric car maker delayed releasing new vehicles until next year because of supply chain disruptions. Tesla's stock dropped 8%, down 30% from its record high in November and set for its biggest one-day percentage fall since then, after the US company's strong quarterly report came in with its supply chain warning. Chief Executive Elon Musk told a quarterly conference call that Tesla would not launch new models like Cybertruck this year because it would dent volume growth in the face of supply chain headwinds that would be alleviated only next year. He said Tesla would focus on ramping up the volume of existing models in 2022 by more than 50% rather than launching new ones. The warning does not look well for legacy automakers and startups, which have promised new electric vehicle models in the coming months. Tesla's even having trouble. Other EV firms are not going to be able to produce these vehicles as fast as they want, said Curzio Research CEO Frank Curzio, adding that the volume growth of many new models could be pushed into 2023. Shares of the other EV makers also fell, outpacing the NASDAQ slide. Rivian Automotive Incorporated, or RIVN.O, dropped 9% and was on track to close at its lowest since the EV pickup truck maker's market debut in November. Lucid Group Incorporated dropped 11%, Lordstown Motors Corp, RIDE.O, lost 8%, and Nikola Corp fell more than 7%. U.S. shares of Chinese EV maker XPeng Incorporated slid almost 9%. Musk said that Tesla was not working on a model that would sell for $25,000, although analysts have said it needed such a car to hit its volume targets. At least 6 analysts raised their price targets after Tesla's report. Some looked beyond supply chain issues and pointed to strong growth expectations. The median analyst price target is now $1,087, which is about 26% above Tesla's current price of $862.89. Tesla is still ARK Innovation's top holding, but its weight in the ETF has dropped to 8% from 11.2% at the end of October, according to Refinitiv data. Wood said in September that she has a 5-year price target of $3,000 for the stock. Tesla was down 1.5% at $817 in pre-market trading on Friday, having lost nearly a third of its value since hitting an all-time peak on November 4th. The $11.48 billion ARK Innovation ETF was the top-performing U.S. equity fund tracked by Morningstar in 2020, but ranked among the worst performers of 2021 as rising interest rates weighed on the high-growth, high-valuation companies in its portfolio. Other top holdings at ARK Innovation, including streaming company Roku Incorporated, ROKU.O, Teladoc Health Incorporated, TDOC.N, and Zoom Video Communications Incorporated, ZM.O, have slumped between 75% and 63% in the past 12 months. ARK Innovation ETF, the company's flagship fund, snatched 27,556 shares Monday after grabbing 27,799 shares last Thursday. Adding those shares together, the total was recently worth $50.9 million, with Tesla recently trading at $920 a share. ARK Next Generation Internet ETF, ARKW, Get ARK Next Generation Internet ETF report also bought 5,683 Tesla shares in February, recently worth $5.2 million. These purchases represent ARK's first acquisition of Tesla stock since June 2021, CNBC reports. In November and last month, ARK sold Tesla stock to take profit, with Wood stressing that she still likes the stock. It's the #1 holding in ARK Innovation, accounting for 8.2% of the $13 billion fund. Wood said in September that her base case for Tesla is $3,000 per share. Our estimate for success has gone up, she told Yahoo Finance. The main reason for that is their market share. Instead of going down from year-end 2017 to today, it has actually gone up fairly dramatically. Tesla slid 31% from January 3rd to January 27th, as technology stocks got hammered by rising bond yields and anticipation of Federal Reserve interest rate hikes. But the stock has rebounded 11% since then. Wood has said recently that declines in tech stocks have created buying opportunities. The important thing to keep in mind is the long-term horizon that we invest in, Wood said in a presentation to investors last week. We have a 5-year horizon. I've never seen innovation on a sale like it is today. The ARK Invest founder also sold 70,000 shares worth of Spotify on Friday, amid the latest controversy surrounding the company. Several artists have boycotted the music streaming platform in light of false COVID-19 claims spread on Joe Rogan's podcast. Wood still holds a sizable stake in Spotify. It is one of her flagship funds and top 10 holdings, worth almost $500 million, according to Morningstar. Amid the wider sell-off in tech stocks, Wood told investors last week that innovation is on sale, though she remained unswayed by the recent market swings. We use volatility to our advantage, she said. We concentrate toward our highest conviction names, and that tends to work very well as we go through these corrections. After rising to fame in 2020 with her flagship fund surging nearly 150%, Wood's performance has since gone downhill. The ARK Innovation Fund fell 24% in 2021, losing over a fifth of its value, while the S&P 500 was up 27%. So far this year, the fund is down another 20%. With the Federal Reserve tightening its monetary policy and preparing to raise interest rates, investors have largely dumped riskier growth stocks, with shares of tech companies particularly hard hit. The NASDAQ Composite Index subsequently fell into correction territory in January, more than 10% below its record highs last November. Wood would not want to be missing out on the Tesla uptrend after what happened in 2021. Wood lost out on some potential profit by selling early, but she's seen significant gains in the time ARK has held Tesla shares. The shares sold in late September would have accrued another $115 million in value. Tesla is still a significant part of the ARK Innovation ETF. ARK famously has set a 2024 price target of $7,000 on Tesla shares, so when Wood sells, it sometimes confuses investors. Last year, though, she explained the rationale for doing so to CNBC, saying, "It never lost the #1 position in our funds. If we had not taken profits in this ride-up from $178 to $900 or nearly $1,000, it would have been maybe over 20% of the fund. That would not be wise portfolio management. We like to control our position sizes." Do you agree with Cathie Wood's estimation? Comment down below.